Hello everyone, this is Alexander Nikolov from trendrecognition.com. In today's video, I'm going to take a look at the US stock market. Let's start with the chart of S&P 500. This is the daily chart. Right now the market is open. Today is Wednesday, August 8th. As you can see, there is a pattern of higher highs and higher lows on the S&P 500 chart from the early June's low. And that's a bit unexpected. As you know, following the readers that follow my site know that I was looking for a decline, for a larger decline from the April stop. I was expecting a move lower, similar to the one that we saw in May and early June, and then B-wave recovery, and then another leg lower. So that the topping process from the last year low, I expect it to be the disturbing process. I expect it to be a sideways consolidation, a flat or a triangle in terms of the wave theory. Now it seems the market wants to do something else. The flat or triangle pattern is still likely, but right now it's more likely to see further gains here for the next couple of months. Why? Let's go to the weekly chart. As you can see, the uptrend from the 2009 low is intact on the weekly chart. The prices are above the rising 100-week moving average and currently are above the 21-week moving average. And if we go back to the daily chart, you can see that right now the daily chart is also in uptrend, and not only in uptrend but in strong uptrend, which means the bulls are in charge here. The path of least resistance is higher, and what's the upside target here? Longer-term readers of my analysis on my website know that I was looking for a 1454 level. This is a Fibonacci level on the weekly chart that resulted from a move in 2008. And as you know, I was looking for a long time for this level to be the final point for this bull market from early 2009. At some point earlier this year, I thought the market was going to top out in April or May, and this would be the top for this bull market. But obviously the market wants to do something else. So right now, the most likely scenario is that we'll see another leg higher toward this level, and the market may reach or even exceed slightly this level. So that's my upside target. Let's go back to the daily chart. What's the price where this bullish outlook will be negated? Well, if the market returns below the early August low near 1365, if the market pulls back and moves below this level, and particularly if it moves below the 100-day moving average, then the pattern of higher highs and higher lows will be negated, and that will be an indication that the market is heading lower toward 2050. So obviously I have a bullish view here, and it's even more strong if we take a look at the Nasdaq 100 chart. As you can see here, Nasdaq was lagging for some time, but a week ago it broke higher above the 2662 level, 63 level, and after this breakout, the market has been really strong, and the daily chart looks extremely bullish. The weekly chart looks extremely bullish, and if we go to the hourly chart, it's in strong uptrend. So we have an alignment within all time frames, hourly, daily, weekly charts all point higher. So usually under such conditions the market continues higher at least for a week or so, and here the pattern is positive on the weekly chart as well. So most likely the market will make a new high above the April stop that we saw earlier this year. What's the most likely upside target? It's 2805. This is a Fibonacci pivot again that is more likely to attract prices and bring the trend reversal that I expect to see, because as you know, I expect this uptrend to be retraced very deeply in 2013 and probably 2014. So going forward, I remain bearish with bearish expectations, but right now for the next month or so, probably 2 months or 3 months, the market is in an uptrend, and I expect higher prices here. Here in the Nasdaq 100 chart, only a move back below, again the same low, the early August low at 2600 level. Only a move below there will confirm that the Nasdaq 100 has already topped out. And one final view at the SPY TLT chart. This is a ratio that you know I follow regularly. This is a ratio of stocks over bonds. So this is the SPY ETF, the ETF that tracks the US stock market, and TLT is the ETF that tracks the US Treasury bond index. And as you can see right now, this ratio is again starts to move higher. It is moving right now above the 50-week and 20-week moving averages. Those are the red and blue lines here. So my view is that for a month or two, this ratio will go up, which means most likely the stock market will continue to rally, and only then we'll be looking again for signs of trend reversal, both in this ratio and in S&P 500 itself. So going back to the chart of S&P 500, in conclusion, right now the outlook is bullish, and the path of resistance is higher until proven otherwise. If you like this video, I'll appreciate if you forward it to your friends, and if you post comments on Twitter or Facebook. And if you are not receiving this video by email, please go to the homepage of trendrecognition.com and subscribe for my weekly newsletter. This will allow you to receive these videos in your email. Thanks for watching, and see you soon.